This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's been a spectacular Monday. It's been a terrific Tuesday. I think we're looking for objectives for a Wednesday. I'm Prashant, with me, my colleagues Mangalam and Nigel. Guys, hi, morning.
Good morning. How about a worldwide Wednesday where the market goes up and then dips are being bought into as they were yesterday?
Sorry, what was it?
Worldwide.
Worldwide.
I think it's working Wednesday, guys.
Working Wednesday, well, that is
Some of the kids have it off. But yeah, I mean, these markets have been absolutely on fire. You have to participate on the upside. And I think it's getting to that time when maybe in the near term you could get a couple of percentage points pullback. But you're investing for the next decade, right?
Yeah.
This belongs to India. And if you're buying it for a longer duration, well, in all probability, the odds are stacked in your favor.
I mean, a percentage points also in a market so strong looks, quite a bit. Maybe a day, 2 days, I don't know. Well, that's the kind of market we're in where downsides are... they'll happen. They're markets. These are cycles, and inevitably it'll happen. Nothing goes up in a straight line. But for now, things have been very, very good. So let's just quickly tell you what you need to know as we begin this Wednesday. Strong momentum continued yesterday. The Nifty, of course, went up 400 points on Friday. On Monday, that is the start of the week, yesterday, it went up half of that, almost half of that. So pretty good. We ended above the medium-term resistance level. I don't want to call it resistance, but the level of 20,850. So 2 days, 2,700 done, 2,850 done. What next is the question. I'll come back to levels in a bit. Cues from global markets are mixed, but they're better than what we had when we started same time yesterday. And yesterday turned out to be the way it is, which is the fact that the markets completely overlooked the weak cues from US. So data suggested in the US that labor markets are finally softening a little bit, right? You had the Nasdaq, which ended up about 1/3%, the Russell, which was down about 1.37%. Actually, exactly opposite of what we saw day before yesterday. The Russell actually was up, the Nasdaq was under pressure, and it was the reverse last night. The 10-year yield lost 8 basis points. The dollar index is back near 104 kind of levels. So neither here nor there, no real kind of one decisive thread going through markets which kind of drove price action, no big disappointment or surprise. I think that's the kind of phase we're in the US as well. Markets have done very well. The S&P, for example, has reached consensus year-end sell-side targets of about 4,600. So, there also, there is... I think people are now wondering what next as we head into 2024. Let's just circle back to levels here. And what does all of this mean? So sustaining above 20,850 is important. If we do that, we open up levels to about 21,100. 2850 and 21,100 we put out exactly same time yesterday as well. This is the next resistance zone that we put out. The lower end is done. And now we look at 21,100, which is the upper end. This is nothing but Fibonacci retracement extension levels based off the fact that we broke above the previous highs. The daily RSI, the relative strength index, one of the simplest ways to gauge whether the market is getting a little overheated, is telling you that it is getting a little overheated. So that's at 84 levels. That is clearly in the overbought zone at this point in time. But there is no real sign. You got to have, overstretched and overbought markets can remain overbought for a while. Unless you get specific signs. But right now, there are no real signs of a reversals yet on the indices, so as to speak. Having said that, I would say expect a pullback at some point, which could last a day or two. That's about it, whenever that happens. Then, I would expect the market to kind of pick up and move up again. Because, the bias has been on the upside, and that I think remains absolutely strong. If anything, that urge has become even stronger. Support comes in for the Nifty at about 2578 and 2382. If you get declines, that 1 day or 2 day kind of declines, these are supports you could use. These are nothing but the 20 and the 40 hourly moving averages, exponential moving averages on the Nifty. The very, very near term kind of levels on the way down. The Bank Nifty, it's headed to its medium-term resistance, which is 47,700. It's about 700 points away from where we left off yesterday. Daily RSI, similarly on the Bank Nifty, is now around 80, which is a little better than the Nifty, but it's still in overbought zone. So again, I think you will get maybe at some point a day of pullback. a day or two of pullback. On the way down, if you get that, 46,484 to 46,653 are near-term support levels where the market should find some supports coming in. The GIFT Nifty will come up on your screen. Let's take a quick look at what that is indicating to us. On your screen. So GIFT Nifty is indicating that we'll start basically at the upper end of that range, which was 21,100. But will that be really the case? Yesterday, the market opened flat, but almost immediately the market started to move higher. We'll see if that is the case for the third day in a row. It's going to be quite spectacular if we get a third day like what we've had over the last two. Guys.
Well, since we're an all-boys party, I'm going to use this, right? Remember, guys, when we were in college and you were wooing that one little girl that, you set your heart on, and all through the year she said no.
I don't know what you're talking about.
I'm not interested in you. But for Christmas, she says...
What are you talking about?
I have no idea. I didn't speak to girls in college. We were studying. Okay, sorry. Go ahead.
I don't think, Mangalam, you would want me to get to that. But let me go ahead with my story for now.
Go on.
So let's go ahead. And in December, she decides, wait, I'm going to go to prom dance with you. That's what the FIs have done, right? They've been jittery all through the year. And suddenly, come December, they're showing us the big money. The FIs, well, they're buying for the 8th straight session. And they were initially net short on the index. Now they're almost net long. So in futures as well, things have turned around a fair bit. The Nifty Bank, that's the one that holds the key. That plays out weekly expiry today. And that's going to be the driving force from here on from a bullish perspective. Looking at the advanced decline ratio, well, stocks, they could do their own thing. We'll see a couple of big outperformers as well. But maybe you get a sense that the mid-cap index could be in for some few days of consolidation, though individual stocks will do a thing of their own. Yesterday, you had way more number of stocks that were declining in comparison to the number of stocks that were advancing. What did the FIs do yesterday? Well, they added long positions, close to around 17,000 contracts, and they covered some shorts as well, which takes the long position to around 49%. But the next plate that I'm going to pull up is going to tell you the story of the last 45 days. The FIs were net short, and we were at around 18,800. Just take a look at that. Gradually, you did see that the short positions did come down. Now they're down to only around 4,000 contracts. And that's why just take a look at the Nifty. The Nifty has moved close to around 2,000 points. The short positions are down by close to around 1.45 lakh contracts. So that's the kind of short covering that we've seen. Yesterday, you had a few strikes that were active, 20,800, 20,700 put. Both of them were fairly active in trade. And there was a sense that there was writing at those levels. On the upside, though, the 21,000 call, well, there was some bit of activity out there, which brings us to the levels. Now, on the downside, you're looking at yesterday's low. We bounced off the 20,711. Well, that could be a bit of a support going by yesterday's data. So that's one data point. The other factor, the 20,700 put was seeing some addition. Premium was roughly around 30 rupees. So 20,670, that becomes a support as well. 20,670, 20,711, that's your support zone. While on the upside, you have resistance at around the 21,035 odd. I think that initially could face some bit of resistance, and we'll take it from there. But the Nifty Bank, that's the one that's breaking away. It was running into resistance at around that 50 as well as the 100 DMA. If you pull up that chart, you'll see the Nifty Bank, well, it was facing resistance out there, and then it's just broken away from the 50 and the 100 DMA, and that's a perfect chart that I'm looking at. The big question from here is, can the Nifty Bank go ahead and conquer 50,000? You'll say that's a tall ask after such a big rally. How do we see 50,000 on the Nifty Bank? I'll tell you what, if you pull up year to date, the Nifty Bank is underperforming the Nifty by close to around 500 basis points or thereabouts, because the Nifty Bank is up 10%, the Nifty is up 15%. If the Nifty Bank can do as good as the Nifty, maybe want to do a 15% odd, then we're going to be moving towards the 50,000 odd mark. So the Nifty Bank holds the key from here. How much more does it have in terms of flows, in terms of short covering, in terms of valuation support? Well, that's the driving force. It starts off in the green, and I think you need to maintain your long bias.
One needs to maintain the long bias. The question, Nigel, is that how many got into this long? And the question is that a lot of people would be asking that, can we actually buy, when the market opens about 100 points higher after it's seen the kind of rally that it has? That'll be an interesting one to watch out for, because now, apart from just the flows and fundamentals towards the end of the year, is the fear of missing out that may play out too. And that's something that played out yesterday perfectly too. We opened flat. From there, we went higher in, yesterday's trading session on both the Nifty as well as the Nifty Bank. So both the intraday charts for the Nifty and the Nifty Bank come up for you. You see a bit of a dip intraday that there was, just about 100 points from the highs. And from there, the move was even more powerful. So what's happening in the market right now is that the dips are getting shallower and the up moves are getting stronger as well. So would it make sense to buy a shallow dip, or would it make sense to buy that 100-point uptick that we're seeing is something that we will keep an eye out on most definitely. The FIs have gotten positive in our markets, buying for the 9th consecutive session. And what's interesting is that, incrementally, the numbers have increased. November 30th is a one-off because we had the MSCI flows, etc. as well. But over the last few trading sessions, if you look at it, yesterday, 5,200 crores was the highest that we've seen, X of exceptionals itself. And in Nifty futures, where we're seeing a bunch of, FII money being put in index futures for the Nifty Bank, that is increasing as well from 500 crores to around closer to 700 crores on a daily basis. If that increases further, we will see the Nifty Bank outperform as well. The FII is, like you said, now 49% long in index futures. US macros looking not too bad either. 4.2%, the yields below that for the first time since September. We're not only talking about risk-free, we're talking about risky assets as well. Bitcoin, that itself has sneakily crossed beyond $44,000. In fact, it's the highest level that we've seen all the way since April 2022 itself. When we're talking about gains, it's 165% higher in 2023 so far. And crude is slipping continuously. We are seeing Brent at around $77, which is close to a 5-month low. So that's a positive for India as well. Your point on mid-cap index, the question is, what happens to the quality of stocks in the mid-cap index as well when fear of missing out takes over? Yesterday, there were 373 stocks on the BSE, which hit a fresh 52-week high. And we had only 27 stocks which hit a 52-week low. And of those 27, none of them belong to the A group. Yeah. And of the 373 that moved, nearly 200 belong to the A and B group itself. So good quality stocks are moving 52-week highs. But, when we aren't seeing a lot of selling out there, that's something we'll be watching out for too. The RBI policy meet starts today, and the street has practically priced in a pause for both the Indian Reserve Bank as well as the US FOMC after the data that came by. So those are a bunch of things that we'll be watching out for.
I think both you all gentlemen don't want to remember the college sweetheart for a more pleasant evening at home, but at least we can say the FIs are back in love with our markets. I think both of you will be on board on that.
The FIs are back in love with our markets. The important part, however, is not just the college romance. It's about the long-term game. And for the long term, I think
brownie points.
Investors are doing
it out of the park.
The FIs keep coming, going.
You'll have a pleasant evening.
I think Sonal will join us in about 5-6 minutes, right? And so we'll ask her. Let's just quickly tell you some views which we are getting from our experts that we want to put out. So Chetan Sheth of Nomura says that they expect modest positive returns for Asia ex-Japan stocks in 2024, supported by strong earnings growth rate, stabilization and valuations, a softer US dollar and a better fund flow environment. However, they do not expect smooth sailing ahead. Unlike consensus expectations, according to Nomura, the key sources of uncertainties stems from US inflation growth policy outlook. China's growth issues and policy outlook and political cycles in Asia are the other risks that they see developing.
All right, let's also get you some money market views. Kunal Sudhani of Shinhan Bank says the US dollar strengthened despite lower US Treasury yields and mixed data. He says traders continue to reinforce their view that the Fed has finished its tightening cycle. He says eyes now will remain on the US ADP, employment change and non-farm payroll data, for further cues from a US dollar perspective. For the USD INR, Kunal says that 83.25 acts as a strong support, whereas on the way down, we will have 83.50 would be resistance.
Well, on bonds, Neeraj Gambhir of Axis Bank says that bond yields declined due to lower US Treasury yields and crude oil prices at the start of the week. However, he adds that higher SDL supply and tight system liquidity during the week led to upward pressure on the yields. He expects the 10-year benchmark bond yield to trade in that range of 7.2 to 7.3% this week, as the market awaits the outcome of the MPC meet.
Right, and let's get stock specific. Then we have a bunch of them to track, and we'll do it in just a bit in our special top 10 segment. But we're looking at Bank of India, India Grid Trust, Power Grid, Himadri, Specialty Chemicals, Oberoi Realty, NRB Bearings, and Shriram Properties on the back of positive news flow. Green Panel Industries, Sapphire Foods, and Honasa Consumer are the stocks on our radar that are likely to open in the red.